Welcome back everyone to another video on my channel. In today's video I'm going to go over two back-to-back trades that I've just called live on Nasdaq. Okay, I just want to say thank you as well to everyone that's subscribed to my channel. We did go over 100 subscribers, now we're sitting at 162. Okay, so we've gone crazy on the support. We're nearly at 200 now, so if we can get us to 200 subscribers, that'd be insane. And I do appreciate the support, the comments. So without further ado, let's get straight into the video. As you can see, we're on the Nasdaq charts as always. You know that I only trade Nasdaq now. I don't even trade gold anymore. Futures is the way forward. If you aren't trading futures, then I don't know for you. But anyway, so we're on Nasdaq. We've got these two clear levels of buy side and sell side liquidity, and we are in a bullish uptrend. Okay, so we're in an uptrend in the market. We've just hit all-time highs on Nasdaq. So no, the daily bias is bullish, and I'm overall bullish. So I'm looking for buys. Okay, now as I've said on other videos, that doesn't mean I don't take sell setups, but I am preferring buys. Okay, and these two examples are both buys. So we'll get straight into it now. So at this point in price, okay, you can see we've just been pushing up, and there's been no real trade entries. Okay, this one here we did inverse, but we already took the liquidity on the inversion. So here we took that level. We inversed this bearish fair value gap, but we took the internal liquidity. So I wouldn't have entered. He did still win. We did take the top of buy side, but the risk reward wouldn't have been there, and we already took internal. So I was remaining patient. Okay, I was still expecting another move here, because if we got to push this the downside and sweat the sell side, I was hoping that there would be a fair value gap left behind. So I'm just going to play price through, and you'll see what happens. So you can see we get this big push down. Okay, we now sweep sell side. Now, what's important about this is that in the build up to this move, okay, you can see that below here we had this bullish 3-minute fair value. Okay, I think it might have even been a 4. Okay, so we had a 4-minute bullish as well. So we had a 3-minute and a 4-minute bullish fair value gap, which is what we are currently respecting right now. Okay, so that's pushing price up, as well as the fact we're in an uptrend. Okay, everything is starting to take shape. We've just swept sell side, and now I want to target buy side. Now all we're looking for is a bearish fair value gap to be formed, which you can see we get one. Okay, now it's only a very small one, okay, but it doesn't matter, because when we've got such a strong bias, and when we've got a good conviction that we're going to go higher, which I did do, because we're respecting the 3-minute, so we're respecting a higher time frame fair value gap. Now, once you get this 1-minute fair value gap, the bearish, what you want to do then is we check other time frames for any other fair value gaps on the higher time frame. So we haven't got a 2-minute, we haven't got a 3-minute, okay, and we haven't got a 4-minute. Okay, so that then means that we've got no other fair value gap that we can reject from on paper. Okay, so there's no other place now in this downward leg that realistically we should reject from. There isn't, because there's no other fair value gaps. So what I simply do then is, I made sure that everything's ticked off my trading plan, my trading criteria, and I just wait for an inversion, which we get on this candle. So I now enter a long position. Okay, my TP is going to be the top of buy side. My stop loss is going to be a candle close back below the bearish fair value gap. So a candle body has to close below. Okay, my first target is going to be this. Okay, this wick, because it was the buying candle after this last bullish candle. And it's a nice place in the market, so I set that as my TP level. You could have gone for this wick, but I chose the one just before that bullish candle. So if you play this through now, you'll see what happens. So we wick down, okay, like I say, we don't get stopped out there because it's a candle close. We immediately bounce off, okay, and we hit TP. At this point now, once we hit internal liquidity or your internal level, we want to go to break even. Now, we came so close to the full TP, but then we start rejecting, okay, and we hit break even. So that trade hit break even, but we would have secured partials at this level. Okay, so that's a winning trade. Now, what actually happens here is a back-to-back trade. So you can see here we've come down with some momentum, but we are still bullish. We're still respecting the 3-minute, and we've actually still inversed this bearish fair value gap. So this is still an inversion fair value gap. We're still holding up. Until this gets actually inversed, we are still looking for buys. So if we play price through, you'll see that here we leave this 1 minute bearish again, okay, and it's the exact same model that we just took, the exact same, okay, because if I drop down to another time frame, the 2 minute, you can see that instead of respecting this, we are now respecting a 2 minute bullish, okay, which is the exact same scenario we had down here. So we were respecting a 3 minute, we bounced. We're respecting a 2 minute, and now we're going to bounce, okay. So again, have we checked all the criteria? We've got a higher time frame fair value gap that we're respecting, yes. We're respecting a 2 minute. Have we got a clear draw on liquidity, buy side liquidity, we're bullish. And have we got a singular fair value gap on one time frame? Yes, we've got a 1 minute fair value gap, and that's the only one in the leg. So again, this is a perfect A+ setup straight after another A+ setup. So again, if we inverse this fair value gap, we should at least come to this level, okay? That is an expectation. And that is where the high percentage win rate comes in. The reason this strategy is such a high win rate is because literally 85% of the time to 90% of the time, we hit the internal liquidity level. So as you can see, we come into the fair value gap and we inverse. The candle body is above that wick, so we inverse, okay? Same story again. We enter a long position with our take profit at the top of buy side, and our stop loss is going to be a candle close back below the inversion fair value gap. And as you can see, we come back down, tap back into it. The next 1 minute candle we smash through TP1 and we hit full TP. Okay, now that is two back-to-back A+ setup trades using my 85% plus win rate back testing model that's the inversion fair value gap. That's it for today's video. Thanks very much for watching. If you haven't already, please subscribe to my channel, like and comment for more videos, and I'll catch you on the next one.